Right, so our next speaker actually had a car accident on the way here, so we rearranged things a little bit. Our next speaker is Matthew Unger, and I'll tell you a little bit about him in a moment. But first of all, wasn't he great? Good way to start out the day? All right, so one thing that you'll be able to do for our next speaker, and I will switch this up right now, is right now, if you take a look at the screen right now at pollev.com/MAK, you can enter in right now another question, which is, which influencer do you trust the most for investment advice? If you'd enter their name, that'll also be an interesting group, and we'll display that on the screen in a moment. And in the meantime, I'm going to bring up Matthew just in the interest of time because we started a little bit late. We're going to go right into the next presenter as soon as we have him queued up here. I'll wait until you're ready. That's all right. It'll just be a couple moments. I'll bring you up. So I'm going to tell you a little bit about Matthew. And as soon as he begins, you'll be able to enter questions that you have for him as well. And we'll push them towards the top. But I'll tell you a little bit about Matthew right now. You ready to rock and roll? All right. So Matthew is the founder and CEO of iComply ICO, which is an investor services and a regulatory technology platform that automates compliance procedures for initial coin offerings, enabling them to be securely utilized as efficient financial instruments. He's an experienced innovation management consultant and founding partner of Ascension Innovation Management. So I'm going to bring him up right now. You ready to rock and roll? Take it away. Here's your clicker, man.
All right, there we go. That's a hot start. You got some audio? Awesome. Cool. Thanks, everybody. So yeah, a little bit just about our background and stuff we're going to cover. If you know anything about iComply ICO, we focus on the regulatory technology space. Our goal is really to, there's a lot of buzzwords around disintermediation and such, but our focus is actually not so much disintermediation, but enabling the ICO market, or more, maybe more concisely, the use of blockchain technology within securities, and allowing us to be able to use this in a way that complies with regulation. So a little bit about myself, my background. I started way too many years ago. I started my career in financial services. I was the youngest broker-dealer at a firm of about 5,000 people that they'd ever hired. I was 21. And I came in and I was 8 days in the business. And what ended up happening is we had the regulator come in and say they're going to do an audit. And I didn't have a single client. I was just trying to build up, my first client base, book of business. And yet, you have to take out of your office, they go in, they start picking out files, and they perform their audit. I didn't even have a file, but you're still sweating, you're worried about it. And you realize that regulation is, or compliance specifically, is a lot less about doing something blatantly wrong, and a lot more about, specifically in the financials and stocks and securities markets, is a lot about setting procedures and defining how you're going to act in a compliant manner, and then doing so, and then documenting that you've done it. And if you think about blockchain technology, this is something that blockchain actually does immensely well. You can set standardized data sets. You can know that the ledger is going to function that way if it's going to continue to move forward. And now you have an immutable documentation. So that's kind of where we're at, but we're in a situation where there's a lot of gaps in the space, and there's a lot of things that we in the community here can do to really amp it up. And our focus is, yes, there is, the ranges by day, $500 billion, $200 billion, $700 billion in the crypto worlds today, but there's $160 trillion in the securities markets. I think it was Tim Draper yesterday that said there's $86 trillion in the cash markets. So there's a T on one side and a B on the other. I think everybody here in this room would like to see a larger market opportunity, and that's really what we're looking to address and looking to focus with building out this technology. We see a lot of new security token platforms out there that are offering to help launch compliant tokens, and this is what we're going to need if we want to enable this mass adoption of blockchain technology in financial services. So a little bit about iComply. Last week, we had the announcement in Bloomberg Law, and Thomson Reuters private network announced our pre-facto compliance protocol, which governs the compliance on the buy and the sell side of every transaction in an ERC20, or basically in Ethereum standard tokens. So this allows them to be used as securities certificates, which is very exciting. We deployed that to Ethereum. I'm going to skip through these quickly to leave as much room for Q&A as possible. But just as a background, if anyone doesn't know, there's a little bit of history with regulation. 2 years ago, my journey in this space really started. I remember 2011, somebody talking to me about Bitcoin, and I remember scratching my head, and he's talking about how he had this recycling program with the school divisions and universities in the Vancouver area, which is where I live. And he's like, yeah, you know, like they have all these old computers and they don't really function very well. So I just take them, and if they're salvageable, scrub them, throw Linux on them, put them on a shelf in the basement, and I mine Bitcoin. And I was like, oh, that's interesting. What's Bitcoin? And he starts telling me about this. And coming from the financial world, and I'd moved to tech about 2 years before that, and so I was like, oh, this is really, from a finance perspective, like double spending, all these opportunities that everybody here knows about. And I was like, okay, this is a very interesting technology. What's a Bitcoin worth? And he tells me, and I'm like, well, that doesn't sound like an opportunity at all. That sounds like it's going to be, you know, another open source Linux type thing. It's not going to be this huge thing. Well, joke was on me. That was 2011. Fast forward that to about 2 years ago, and I was working on a program out at MIT focused on blockchain being one of the things, but financial security, cybersecurity, and different types of technologies. And then we watched the DAO unfold. And I was amazed by how much money people were raising in this open and decentralized way, and how efficient this was in raising capital, which is, you know, this ICO vehicle. No matter what anybody says about ICOs, we know that they're very efficient for raising money. So I also, like I said before, you see this opportunity to actually use blockchain to document things like compliance. Document, hey, we did KYC. This is our compliance ledger. And so this was my project and what I focused on. And then, of course, you go from university into the market, and everyone goes, compliance on ICOs? You're nuts. Fast forward that, and then we see July 25th of this year, the SEC comes out, says a notice on the DAO, these things can be securities, discussion over the Howey test, and the dialogue has moved on. We've seen a number of regulators around the world moving forward. So then we see last week, SEC, CFTC hearing in the Senate, and there was a question which I was actually quite surprised by the answer, and I live and breathe regulation specifically focused around initial coin offerings and blockchain and things like digital identity and privacy. And I was really surprised to actually hear the outcome of the question, which specifically was phrased around this DApp that would share hard drive space, et cetera. And, you know, I was thinking, okay, like, we all know what they're talking about here. We know which offering they're talking about here. This is a utility. And they very clearly said, that would be a security. In our eyes, that would be a security. And this is the chairman of the SEC, which you know, opens a bit of a dialogue, and I don't want to get too far into the security versus utility debate, because in a lot of scenarios, it's an excellent distraction to keep this technology from completely disrupting traditional capital markets, traditional financial services. Let's just keep talking about this, when in fact, if we call it a security, we have a rule book called the Securities Act. If TurboTax can automate and can use the rule book of the Income Tax Act, why can't all the genius minds behind blockchain technology do the exact same thing with this technology for the Securities Act? We have a whole rule book for it, and it's a $160 trillion problem. So this is kind of our perspective at iComply, but there, of course, is massive other opportunities in the utility space, and you know, I worked on one project. If you guys are familiar, or I should rephrase that, I advised on one project that came out last year, where they worked on a new type of Ethereum standard called ERC721. The big difference between this token and an ERC20, one of the big differences was the ability it's non-fungible. You could not divide it into a whole bunch of little pieces, and then they decided to throw cats on the blockchain. Which is what we saw with CryptoKitties. So you see projects like this, and you know, it's funny because that, to my knowledge, is the only project, the only ICO project that I've heard of, and we like to call it an initial cat offering. But that was the only project that I'm aware of that a North American regulator has given a letter or a piece of documentation to say this is not a security. So there is innovation and there is opportunity, there is evolving regulation. And I would say if somebody is looking around for things that, you know, this idea of like running overseas, running to Gibraltar, jurisdictional arbitrage, legislative arbitrage, there is opportunity there, but it should be weighted with business risks. And it's important to understand that the regulations are not about where you issue from, it's where the investors are. So you access a US investor, but you issue from Singapore, you still have to fit within the bounds of the Securities Act. So it is very important that you understand, and when you're assessing different jurisdictions, that you really understand the implications, that there are some implications about where you issue from. For an example, if you issue from the US, you have Reg D, Reg A, Reg A+, crowdfunding exemptions. If you issue from Canada, you have several of these, as well as things like the offering memorandum. You issue from Europe, they have their own exemptions. So there's a lot of different opportunities, and it's interesting to notice that you can also layer these opportunities over top of each other. If you're dealing with a lawyer in this space, they'll call them wrappers. But the idea, and that's, you know, with a W, not with an R, but the idea is that you essentially can access different exemptions around the world. And if you think of a Reg A, and okay, well, I can get 50 million from US over here, but then an offering memorandum in Canada, I can access unlimited investors, global investor pool, accredited and non-accredited, and an unlimited amount of capital. So that opens up a whole new opportunity. In Europe, they have their filings. We're looking at other jurisdictions as well to see what other opportunities there are there. But there's a lot of opportunity to raise a lot of money, more than we've ever seen raised with ICOs to date. Even in the largest ICOs, there's opportunity to raise a lot of money just with the exemptions. Not even getting into how can this technology be used beyond. So moving along here, I think we all know the amount of growth that we've seen. These are pretty standard, but it's important to understand that from a regulatory perspective, these are challenges that we have to face, and this is the current perspective of the regulators in the USA, is that these are securities or commodities, so we need to understand what that means. And typically that's procedural, and you know, as an example, with a security token, there's procedures that you have to follow, which can be programmed, and you can automate these things. So while they say, okay, well, this is a security, and there are risks and concerns with that, we know over the history of capital markets, there's been a lot of money raised with securities, and we see as an example here, $160 trillion. I think this is from Boston Consulting Group. Most of that being equity, and a big chunk of that being debt, which are just two examples. Security doesn't necessarily mean it's shares on your cap table, but it could very well be. And out of the applications, we have now hundreds of applications from North American companies. A lot of them are established companies, have nothing to do with blockchain. But they say, if I want to issue shares in my company, I've got to go get some DocuSign form signed, then I got to take that, send somebody some share certificates, they sign them on the shareholders agreement, send that to my lawyer, we check, okay, cap table's fine, we move that back. And it's just this mess of files moving back and forth, often over email, which is not overly secure. And then you get into a scenario where you do this with blockchain, you sign the documents and you issue a digital share certificate, and everybody's version of the cap table is done. And so there's a huge amount of what they call back office efficiency when you start looking at applying this technology in this space. And there's a lot of people that do talk about this stuff around, oh, well, it's not scalable enough. You know what? Most of the people in this room, I don't know what companies everybody is from, but I would suspect that most of the people in this room that have a company, the trading volume of your company, the current, like as an example, the Ethereum platform could easily handle your trade volume. The stock exchange itself, hey, maybe not. But we don't necessarily have to go the old way of doing it when we have this technology. We can restructure some of the business cases around how the technology is applied. We don't have to centralize it all into an exchange, as an example. The other thing that's really interesting is that regulators don't have any tools in this space, which I think is a reason why there's a lot of fear around it. But this is something that we see as starting to emerge as somewhat of a best practice. And you're seeing a lot of token platforms, like I mentioned earlier, that are out there where they're starting to move in this way. If you were to issue using something like an offering memorandum, as an example, you'd see that there's audited financial statements. If you're a startup doing audited financial statements, you've got a desk and 3 computers, it's going to be pretty straightforward. You know, you've been around for a couple months, it's not something that you have to really worry about. But you know, if you've been around for a long period of time, it's going to be a little bit more onerous. You move from there onto stuff like smart contract auditing. Make sure that somebody tests your code. Before we deployed to Ethereum mainnet, we had people testing our code, reviewing it, making sure that we actually had done a proper job. And there's other platforms, bounty platforms, different things that are out there. There's a lot of experienced people in this room, ways that you can make sure that the quality of your code is tested before you deploy these smart contracts, because we do know that cybersecurity is a big risk in this space, and it's a bit of an issue, or maybe not a bit of an issue, it's a major issue. So one of the things I wanted to give you a little bit of a sense is, with our product, the way we deployed it, what are some of the opportunities that you have? And in this case, we really focused on zero-knowledge proof. We deployed 2 products, our pre-facto protocol, which allows for the securities trading to happen, or the compliance around securities trading to happen every time the token is traded, and keep a ledger of that compliance. And the second piece was zero-knowledge proof identity, and giving the individual, you see here, you have a compliance dashboard that you can build your whitelist, but you're not necessarily having a 13-year-old who's a genius blockchain developer in his basement with a whole stack of passports on his hard drive. So you don't have to necessarily send your passport photo to every single ICO that's out there. Sometimes you want to get a little deeper, and there's things like blockchain forensics that are really starting to emerge as a whole new space. Most people don't realize this, but the Bitcoin ledger, as an example, about 80% of the Bitcoin ledger is attached to known identities. So there was a phrase I heard somebody say, it's not anonymous, it's pseudonymous. And it's true. There's a lot of insight into who's doing what, whether or not that's necessarily publicly disclosed. There's a lot of law enforcement agencies that already know, who hasn't paid their taxes or who hasn't done different things. So, from an issuer's perspective, there's actually times where it's important to understand the health of your network and what sort of address consolidation you might see. AirSwap, perfect example of this, where we saw, after the first week, a massive amount of wallet consolidation. You can set a limit per wallet, but if you don't have any sort of governance built into the token, somebody can then go in and buy up a big chunk of your network and potentially start really degrading the health or the quality of your network. Whether you're a utility or a security, it doesn't really matter. This is a risk in this space, where the more we centralize it, the less effective this technology really becomes. So I think I talked a little bit about where we're going with the secondary trading protocol and kind of what our focus is on that product, but give you a little bit of an idea of the opportunity for governance in a token and how you can start affecting all sorts of different pieces of regulation, or even just agreements within your own, whether it's a network or a company that's issuing them. You can set all sorts of smart contract layers, but you can also focus on doing it at the protocol layer. So there's basically 3 different ways that people are trying to solve compliance in this space right now. We focused on the third way. The first way is at the interface layer. So this is having forms that basically compile some sort of Reg D filing or different things like this. You move down a layer where you see KYC tokens. There was one company that's working on KYC and AML tokens to integrate into their platform. So we were like, how much is this going to cost within the Ethereum ecosystem? And you're looking at over $100 a trade. You're going to be charged in gas. So it's not very effective. And we had to go right down to the third layer, which is the protocol layer, right alongside the blockchain. And so if you imagine you have a blockchain that's your ERC20, and then alongside it you have a compliance ledger running. And they call back and forth, say, is this trade compliant? Okay, yes. Document everything that we checked so that if there's ever an audit, I can give a regulator an audit key to say, hey, you want to investigate? No problem. Hope you have some data scientists. The other thing is privacy and cybersecurity. You can see as an example, this was a recent report from just last month, but there's been a lot of theft. It's the one thing that blockchain has done an immense job at is doing things that typically transfer agents and clearinghouses do. There's a reason why we have trade plus 2 days. It's to fix all the human errors and roll back the transaction in a centralized database. You can't do this on blockchain. And so the point of weakness in blockchain is not in that same scenario where we see in centralized markets. The point of weakness is wallets, is investor education that, hey, you know what, sometimes hot versus cold, maybe you should understand what this means. Where we focused on our product specifically was, let's get all these points into a global portable KYC that somebody can take from an exchange and use it on a token platform, utility token exchange to a security token platform, et cetera, and be able to move that around while still maintaining zero knowledge proof. We've seen Equifax, we've seen the SEC EDGAR system, we saw what Wells Fargo did by giving every employee access to your social security number. It's time we start to look at the privacy in a way that maybe gives a little more control to the individual while still meeting the standards of regulations around what's being held. So if you guys watch this, and for our team, this was our Super Bowl. Everyone watched the Super Bowl on Sunday, and I actually forgot it was Super Bowl, and this is what we all queued up to watch. But the SEC hearing came out, and one of the things that I loved was that if there's any indicator that we're in a new era in finance, it's when the CFTC chairman uses the word hodl, which is a perfect example. But the opportunity in this market is immense. We're talking about, based on their calculations, at the current rate of growth, we could see a $19.5 trillion increase in 22 months. So the opportunity in this space is something that is not something one company or one platform is going to be able to solve. There's going to be a lot of different ways that we have to address this in a lot of different jurisdictions. So I want to kind of cap things there and leave the floor open to some questions. Kind of leave it open and see if anyone has any questions regarding security, utility tokens, compliance, or our company, whatever. Open docket. We've got one there.
That was very interesting. With the Jobs Act, there's some isolated example to raise money to crowdfund around smaller investors. But otherwise, we still have the regulations that generally you have to be an accredited investor, which when you boil down the regulations, you basically have to be a millionaire. Have you solved that problem that you can identify who your investor is and stay compliant with how you're raising that money?
So yeah, I want to kind of cover two things with that. First, have we solved that problem? Depending how you define the problem, identifying who your investor is, yes, we can handle that, both in the token sale as well as during secondary trading. But I have a bit of, and this is going to get into maybe a little bit of my personal bias and worldview, but a world where only the wealthy are able to buy and invest in these companies and own these tokens, and everyone else is going to get somewhere down the road be able to pay software fees. We call that digital serfdom. And it's maybe a world where we need to expand and understand that some of these things, we've known that things like a prospectus. Last week, Jay Clayton himself said, last time he bought an investment, he didn't read the prospectus. It's known that it doesn't work. It's not a good method of communicating risks to the retail investor or even to sophisticated investors like the SEC chairman. But then we also have things like the accredited investor, which we know in traditional markets has not been an effective means of telling if you're actually qualified to invest in this opportunity. So in a world where every token that's supposed to be issued is supposed to be a security, we could end up with some systemic harm with some of these regulations. So I think there needs to really be some more evolution within these regulations. We see S1585 in the US here, focus on sophisticated investors. Do you have any knowledge in this space? It's going to be very interesting to see, when maybe the questions on these sophisticated investor questionnaires will say like, who was Satoshi Nakamoto or something like this. But we're going to need to start to have people, one, be educated, and two, have some sort of a gateway with some of these things that bypasses you have to be a millionaire.
So are you a crowdfund platform?
We've got two products. We've got an ID, so we work security token platform, utility token, fintech platforms, exchanges, et cetera, could use our ID product. And then we have our protocol, which does a secondary trading. So you can't go onto our platform and buy and sell any sort of tokens or like buy new crowd sales or anything like that. But if you are doing some sort of a platform or you're doing an ICO, you can embed the ID product as an iframe right into your site and manage your whitelist. And if you are looking for secondary trading governance, you can inject the protocol right into your token, and it'll call back and forth between a compliance ledger.
My name is Jax. We help companies to go to ICOs. So main question I want to ask is that we know that we are going to hit $20 trillion market cap in 2020, right? So now what is happening is most of the ICOs, non-accredited investors are not able to participate, right? Only accredited investors are able to participate. So are we losing the opportunity? Americans are losing the opportunity. That's question number one. Question number two is that when it comes to the service industry, what is your recommendation? Is it going to be a utility token or security token? Because we are hearing multiple things.
It depends on whose perspective you talk to. One regulator asked me when we did a demo for them, they said, well, is the world going to move into a scenario where some publicly traded company is going to do an additional offering of shares via a security token and then all of a sudden do a utility token for something else? And I was a little bit surprised by the question, because why, as an example, if I'm using a centralized database software that's highly secure and used in the banking system, and I decide to use that to manage, I don't know, my marketing list for a startup, does that mean I have to do all sorts of financial regulations? We do have to remember that this is essentially database technology. So the idea of saying, well, it always has to be a security, for me is a little odd. But there is definitely different regulators. Switzerland, as an example, just announced that, no, here's a bunch of criteria that will turn an issuer from Switzerland into a security token, as an example, and all the regular security regulation applies, and that was just this week. So there is movement on both sides. The question around the US, I think China, the UAE, and Russia have all talked about issuing fiat cryptocurrencies. And I've talked to some of the governors of central banks. Their objective with this is to separate themselves from a US petrodollar and separate their economies from US petrodollar in something that's globally fungible. And it also gives the government a massive amount of surveillance opportunities. So the US government is in a state where this technology is moving forward globally. It's not something you're going to shut down. But we need to be able to adopt and move this technology into the mainstream without creating a whole bunch of systemic harm. So we have to do it properly.
We got to finish up, but you can, if you have more questions, chat with them during the break.
Yeah.
Let's give them a big hand.
Thank you.
Nicely done. Very good job. Awesome.